Okay, I wanted to talk about one of my go-to trades that I usually put on a couple times a month in a couple different underlines. This underlying was STLD, and the strategy is actually called a strangle. So there you go, strangle. What it is where you sell a naked put and you sell a naked call. Let's see, as you can see down here, what I did was I sold the naked 50 strike put and I sold the naked call at the 90 strike out till August. I did that back on June 22nd, so a couple weeks ago. And today I actually just closed it for, I did that for $1.55 credit. And today, if I unlock this, well, it's a better price now, but I actually bought this strangle back for $1.10, which means I made 45 cents per contract, $45 per contract. Remember, when I say cents, like 45 cents, that just means you need to multiply 45 cents times 100 per contract. And in this case, I sold the one contract, so $45. So 45 cents times 100 gives you $45. I hope that makes sense. Comment below if you need more explanation or a better explanation. But anyway, I want to go in and explain why I sold it at this time, or I bought it back rather, because normally what I like to do is I like to buy it back at 50% of max profit. And if you recall, I said I sold it for $1.55 credit, or $155 per contract. And I bought it back for $1.10 per contract. And I did that because I don't really have much faith in the market right now. I think that it's, that's a little shaky and that it's going to come down. I don't think it'll rally anytime soon, especially with the interest rates rising. And then also I did it because if you look down here, earnings is on July 18th. And I didn't want to hold this underlying past the earnings date. And if you recall, I sold the 19th, the August 19 expiration. And that means that if I didn't buy it back now, I would, or could potentially hold it through earnings. And who knows, earnings could be really bad, which means that the price could fall way down here, or it could go way up here, putting my strikes in the money, which means basically what that means is I could lose money. And so what I did is I took the risk off the table. I took a little bit of a profit. And in this case, in this market, I recommend everybody do that. All right, thanks, bye.